Let's talk about the markets, the VIX, and the financial and political situation in the United States. All that and more coming up right now on your Short Vol Show Live.
You're watching Famous Dave on YouTube.
We were waiting for the big sell-off to occur, talking for weeks about how there was going to be a sell-off, and then we saw, on one day, 2 days ago, we saw Tesla go from up 150 to down on the day, and it was like everybody's ready to go. Here it comes. It's finally arrived, and the sell-off turned around and rallied, and I'm sure caught many people by surprise. This is a tradable environment out there, folks, but it is one where you have to leave your notions of what is going to happen ahead of time at the door and just react to what is going on with the market. I believe the quote-unquote monsters of tech are very important to follow for clues on this market. Plus, we had JP Morgan earnings yesterday before the open, which stimulated the market better than expected and launched us into a rally. We were up a ton after the close yesterday, and we actually aren't up as much as we were when I last checked into the market late yesterday. So, I don't believe the volatility is over. I don't believe that big sell has actually happened yet. I think we need to be light on our toes, because any loose deltas you have hanging out. What do I mean by loose deltas? That means you're long or you're short in this stock or another. They will burn you in this market because stuff can move very quickly in one direction or another. However, if you have your wits about you, have a plan, and can execute on that plan, there is two-way trading to be had here. And once a move starts in one direction, it is possible to jump on. The issue is just being really tight with your deltas and being very careful. Things have worked out for me over the last session or two, but it's kind of been the story for me of, a good day, then a bad day, a good day, then a bad day. Unfortunately, that's better than losing money, but it hasn't been a real barn burner of profitability. It's been kind of back and forth. However, when we get an up move, if you can let go of a little bit of deltas, and then when we get a down move, you can scalp. That is very doable in this market. Let's take a look first at the VIX, because the VIX has come in a lot. Remember, a couple days ago when we did have that sell-off, the VIX was up as we rallied. And that was kind of a shocker, right? Well, yesterday the VIX was kind of down. It wasn't as if it was super down, but it was down as the Nasdaq was still selling off. Actually, the other markets were rallying. We've had the story of the Nasdaq and the story of the other markets, but VIX really came in yesterday, and it's really come in overnight as well. So 2020 hindsight, but yesterday was a great time to short some volatility, or the day before. We got that spike up. Now the VIX had kind of a tight range compared to other times in history, right? It's been hanging out between 20 and 30. We haven't actually seen anything that you could really call a spike. It's just been elevated, and then it's been moving in this range. Let's take a look at the VIX right now. We're at around a 28, and yesterday volatility was very much in. Even when the Nasdaq was down, vol was in, and it continues to be in now. Let's take a quick look at the VIX chart, and if you watch Theo Trade and Don Kaufman, you see his view that some of these vol levels may be too low. He loves to talk about this expected move thing. I'm not as I understand that expected move is what the options markets are telling you the move should be. Now, over time, expected move expands when we're moving around more and more, and contracts when we're moving around less. And I don't see it as significant as he does, but it does illustrate the fact when we're going outside the expected move a lot of times, that illustrates the fact that the markets have been getting it wrong a lot lately by having option prices too low, right? So that creates an opportunity to buy some options and take a ride on stuff if you are able to manage your deltas properly, right? So if you're buying options, but you're only buying calls, and the thing goes down, that's not going to help you very much. And buying, like, say, a straddle in something, and then being able to effectively scalp your deltas. So, for example, if you were to buy a straddle in a stock, and then the stock goes way up, you sell some, the stock goes back down, you buy some. Managing your position that way is a skill that you need to learn how to do. So just because you own, some straddles doesn't mean you're necessarily going to make money unless you learn how to trade back and forth, scalping a stock against that. So I would caution people about accumulating too big options positions to the long side, because it's a hard thing to do, especially as a retail trader, because you don't have those advantages of being able to buy on the bid and sell on the offer, etc. And if you talk to somebody like Tasty Trade, they will tell you it's just never profitable to be long options. Now, I don't agree that it's never profitable, but it is a tough thing to be able to time stuff right, and to manage a long gamma position is a skill in itself. So if you haven't been taught how to do that, it is a tough thing to do. My advice would be at least to lay off of selling stuff when we've got stuff whipping around like this. And we certainly have stuff whipping around right now. So let's take a look real quick at the VIX, and then we'll move on to some other topics real quick, and I'll let you get back to your life. So here's the VIX. We did have that pop over the last session or two up to 33, now down to 28. That's a 5-point range, which is pretty significant. However, this is the biggest really move we've had in some time, and it isn't really if we were going to have the big one sell-off here, you would expect the VIX to get cranking higher than 33, right? So that should be a clue to you, as you see the VIX like edging up, and then we get this down move, and the VIX isn't moving that much higher. That should be a clue to you that the sell-off is going to fail. And there are a lot of people out there who are used to buying the dip and having it work all the time, and it has been working all the time. So thus, expect the dip buyers to come in, and expect buying the dip to work most of the time, as has been the case in the last couple sessions. Okay, let's take a look at Tesla here for a second. There's a lot to go over today, as opposed to a lot of other times. Okay, so here's that day where we got the big rally on Friday, and then Monday, the gap open, and then it reaches a height and it just fails, right? It goes way down. Now we've seen it the overnight before yesterday morning. We saw this up and then kind of fade yesterday. Tesla kind of sideways, I would call it. I know up $50 doesn't sound like sideways action, but for a stock like this, as it's moving all over the place, it kind of feels like sideways action when you don't get that big move up. And I would watch, what I'm doing with my watch list, I'm watching Tesla, I'm watching Apple. Apple here, this was one of my more successful trades in the last couple of days. I did buy a put spread here with Apple, $3.99. I actually did buy sell the absolute top in Apple. Was able to ride it down here. I would look for these to fail again. We're seeing these big move up. I would look for some of this rally to fail. However, like I said, again, you want to be careful with your deltas. However, we get the down move in something like UVXY here. This is, to me, a buying opportunity in UVXY. To bring trading to its most simple form. When you get volatile markets like we have right now, you can almost bring trading to its most simple form, which is stuff is up, sell some, right? Stuff's way up here, sell some. Stuff's way down here, maybe buy some. it seems to be whipping back and forth. Here, Lulu, okay, this is one I've been trading a lot. You know, stuff gets up to this almost all-time high here, 321. Sell a little, right? Stuff gets, then the rubber band goes to the downside, maybe buy a little. Now we've gotten this rally. Look, Lulu, big rally into the close, right? It looks like it might be a near-term top here around 312 in the overnight, and now it's starting to lay off a little bit. So, you know, this might be a time to initiate a little bit of a short here and see what happens. But the problem is, of course, that stuff is whipping all over the place, and I have been going a lot. This is another little pro tip for you is to we've noticed a divergence between the NASDAQ and the monsters of tech and other industries lately, okay? So banking, energy. And so what I've been doing a lot is I go onto my Thinkorswim and I go to my Market Watch tab and I look and I see which stocks are moving the market today. So if you go to your Market Watch tab here, and you go to visualize and you can pick, okay, the Dow, what's moving the Dow? Now, markets are closed right now, so this is going to show from yesterday, but you can see from this visual, okay, well, HD is the biggest mover, right? And if you hover over HD without clicking it, it'll show you how much it's up. Okay, HD up 3%. Once again, these numbers from yesterday. You can go to the S&P 100 and say, okay, what is moving? What is the major mover? And most of the time, it's going to be these big monsters of tech because they have the market caps, right? But a couple days ago, it was Netflix. But you can see what's moving the market, and you can zero in on that and watch whatever the big mover is for the day. You know, because stocks like Apple, okay, Apple right now is up, what, $6, and you know, if Apple starts to turn around during the day and go in another direction, inevitably the market is going to follow that because these are just these huge, huge names. So I would keep these on the top of your watch list. The Apple, you know the names, Facebook, Google, Netflix, and Tesla also, because Tesla, I guarantee professional traders are watching this stuff. If Tesla starts to break to the downside, it's going to make people think twice before they start buying something else. So keep an eye on all of these other stocks, what they're doing as you watch this stuff. Once again, back to the VIX. Let's take a look at the term structure real quick on the VIX. And see what we see. It has been staying nicely in contango for a while. Hello, Marcella. Nice to see you. When we look at the term structure, we don't. For me, it's the absence of what we don't see that is important here, and that would be. We don't see this structure moving. It's stuck in the same shape for a while, right? Even when we get the pop to the upside, the structure has not gone out of contango for a while, right? It stayed in this contango shape. The cash moves up and down, but it stays in this contango shape. Also, what do you see in this chart? Well, obviously, this election bump here is on everybody's mind, and it has created this nice contango decay here. Look, we're up to 6.7%. That's a pretty high level. We haven't seen that level in quite some time. However, when we see everything in contango and this chart not moving, it means that the VIX complex is not freaked out. So it's showing that the stuff is not coming apart at the seams right now because the VIX complex is not freaked out. It's just keeping its shape. So these moves, the big move we had yesterday and the day before, is not phasing this VIX complex. And until we actually see stuff like move into backwardation or something, there's not that real big downside move. Now, I am still bearish on the markets. I still think we're going to get more downside activity. However, you know, picking tops is going to put you out of business. If you're just going to lean short all the time, you're going to get crushed. So it has to be kind of selective. And we've seen the dip buying so many times that you have to consider that a dip is going to get bought when we get a down move. And there you have it. It's been a little bit, a little bit frustrating for me P&L wise that I'm grateful that I haven't lost money, but I wish that I'd been able to capitalize more on some of these opportunities. But I feel the market is going to continue to reel more and more because of the fact that there's just that disconnect between the market and what we hear in the news and the economy. I think that markets don't remain irrational forever. I know there's a lot of in financial Twitter, they would, be mad at me for talking about this because the actual market has been rallying. And so to sit here and say, well, the market shouldn't be doing this. Who am I to say what the market should or shouldn't be doing? Who am I to be able to know what the market is going to do? I never have known in the past. Why would I know now? However, I have this fundamental case, which is that the economy is starting to close down more and more in the U.S. again, and the market just hasn't acknowledged that in any way. And it does hurt companies when the economy closes down. I think we can all agree on that. And the market just isn't reflecting that reality right now. So it seems like a clear case to be bearish. And that's kind of just where I am right now. Now, I'm not acting on that until we get to a point where like some of these things hit all-time highs again, and then I'm leaning a little short on some of these things. I think that's a reasonable way to look at things. Anyway, I'm interested in hearing your opinions on stuff. I'm hoping to get I'm working on some good interviews coming up, so I'm hoping they're going to work out for us here. All right, so Tesla, once again, keep an eye on Tesla. I would think if Tesla breaks 1,500 and starts to move lower, the market will follow because, as much as people are saying, well, this is great, we're going to rally more, I think this is all about psychology, and traders, I know in the back of their minds have heard the news report saying, why is the stock market so high? What's going on? Why is this stuff going up? And I believe that there is a certain point where they don't have as much conviction to buy. And so when we're at the all-time highs, these pullbacks seem like a good opportunity to get short. I'm off of this whole I have been trading UVXY, but I've been trading it more like a stock than putting on like just long-term shorts. I've been trying to buy some calls when we're down a little bit and just short-term buy one strike. You pay $130 for one strike, then the next strike up, maybe you can sell that for the same price you bought it. Just kind of in and out, taking advantage of short-term moves type trading back and forth stuff with UVXY is what I've been doing while maintaining like almost no delta and just making sure I'm not naked short a lot of stuff because I think that this market really has the potential to get crazy real quick. So I'm not one that's in the mood for having short calls in UVXY and this kind of thing. We haven't seen the VIX really get up and roll lately. I think it's due at some point to do that. Obviously, we're coming in. Dow futures up 500 this morning. NASDAQ up 82, and E-minis up 47. It feels like a great rally, and it would be a great rally if all this other stuff wasn't going on in the economy, which the market seems to just be totally discounting. You've heard me talk before about the importance of the $600 unemployment thing. It appears from all of the information that we've gotten so far that they will be continuing that in some form. Probably the form will be $200 to $400, it being reduced from $600 extra dollars to $200 to $400. As much as they would like to do some sort of plan where you examine people's income and say, okay, we need to cap it at this amount of someone's income from the past. Making that analysis on a case-by-case basis would take forever, and we just don't have the resources to do that. So they will, I believe, pick some arbitrary number and go with it. Last time they picked the $600, I believe, because they said, okay, what does the average person make? They concluded that was about $900 a week. And then they said, well, what is unemployment covering? They said, well, unemployment's around $300 a week. So what's the difference? It's around $600. So when you hear people saying, it doesn't make any sense that you're paying people more than 100% of their income. Well, the way it worked out that way is they took an average. And so if you take an average and you use that number, then half the people are going to get paid more than the average, half the people are going to get paid less. I don't really believe that people are just sitting home and trying to collect. Some people are certainly doing that, but other people legitimately don't have a job of no fault of their own, especially if you are in the like bartending industry or this sort of thing. Anyway, what I would expect to occur is the Congress is on break until Monday, or the Senate is, but they're talking about the stuff right now. There is a deadline approaching. Texas ends just the way the calendar week works. Texas ends their $600 thing on the 25th of July. And thus they need to push something through real quick to not have a gap. Now, a gap in the $600 thing is not a big deal. Obviously, if people know it's coming in a couple weeks, then that's fine. But if they discontinued it completely, I think it would be a problem for the economy. I would expect markets to move to the upside when and if they announce a deal. They have been signaling, however, that they will have some sort of enhanced unemployment moving forward. The other issue, of course, is mortgages. We've gotten several reports that people aren't paying their rent, people aren't paying their mortgages, there's going to be defaults, et cetera, et cetera. You have these great JP Morgan earnings, but you're hearing problems on the horizon, and what you're hearing on the horizon coming up doesn't really jive with what, once again, the stock market is saying. So who's right? And is there a trade there? That's the big question. For a TVIX update, TVIX has been replaced by TVIX-F. So if you want to know what TVIX is doing, you can type TVIX-F into your chart, and that will give you. And this has had decent volume. Obviously, there's still people that are in this. I think Vance Hartwood was saying this is the most volume, the highest volume trader it's had 4 so far today, but we're not open yet. It's been one of the highest volume trading over-the-counter issues since it went over the counter. And my advice has been the same as always. Get out of your position if you're in it. Move on to something else. It has had liquidity, but it's fear that liquidity is going to dry up more and more as time moves forward on TVIX. All right, so I did listen to the entire speech from the Rose Garden yesterday by the president, and I feel that this speech was a reaction to the New Hampshire. He was supposed to go to New Hampshire and talk to the faithful. I feel that since that was canceled, he hasn't really had a platform to attack his rival, and he used the Rose Garden thing to attack Joe Biden. It's always hard for me to sit through presidential speeches, regardless of which party it is, but I forced myself to sit through that yesterday to see what was said, and it's rough. It was rough to sit through. Anyway, best of luck for trading for everybody. I feel like this rally is going to fade here, but we'll have to wait and see. But keep your deltas tight. Don't commit, and then because you can get the stuff can run either one way or the other farther than you think it's gonna. So stay disciplined. Stay in the game. When you're wrong, just admit that you were wrong and give up. Cancel that position. Many people like to say it's easy to make money. It's harder to hold on to it. I think that that's true right now, more than ever for people. And best of luck. I will talk to you soon. Thanks for watching the Short Vol Show live. Best of luck with your trading, and I'll check in with you on the next day or two.
You're watching Famous Dave.